This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, December 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. No overnight markets here because we're closed for Christmas. Also, no export sales either. So we'll jump right in. Hope everybody had a nice Christmas. Ben, we were talking before the show. We did see some strength in the markets here as we closed on Wednesday, as we were heading into the holiday. And, you know, looking at today, you're going to have January option expiration, and certainly soybeans. There's been quite a bit of put open interest. Certainly we were pretty deep in the money on quite a few of them. And given the rally the last couple sessions, just wanted to see how things were shaking up on that front. And then with that, we'll throw around the room.
Yeah, there was a big imbalance between in the money puts and in the money calls. If we were to settle today, if you just go back and take a look at what's open, we got into the low 1040s in the Jan. So there's 12,000 that's not going to get paid, 19,000 at 1050, 9,000 at 1060. We're looking to be above that this morning, and maybe taking out 1070. We can have a strong day, any kind of tailwind. So we've taken 50,000 puts out of the market. Not everybody can get paid, and everybody gets a trophy in commodities. So I would expect, I would be shocked, I guess, if we went back down to 1050 and pinned that, which a lot of people were looking at that as the largest nearby open interest strike with 19,000 puts on. And if we could get above 1060, you're talking about taking well over half those puts out before we expire. And it's an interesting time too, because we're going to head into delivery next week on the January contract. And there are a lot of beans in deliverable position. And I think that's from farmers selling beans out of the field and us not hitting our gut slot exports the way we maybe normally would have. But I expect that to work its way out over the course of the year. I don't think that we're going to come up too short on bean exports. So maybe that's the optimist in me. But certainly we've done a decent job of taking people out of the 1040s, 1050s, 1060s. See what it wants to do today. Commodities in China overnight were really strong, and the weather in South America is maybe a lot of rain in certain places and no rain in other places. And I think that Argentina is starting to maybe catch people's attention a little bit. So
very good, Dustin. What's on your mind here this morning? I know we got holiday markets, pretty. I would say though, given Wednesday's action, it was still pretty good volume. It wasn't totally choppy, thin like we've seen in years past. There's still some pretty good participation the last couple sessions, given that even for the time of the year that we've got.
Yeah, certainly. Yeah, historically it's been kind of a choppy sideways market for this week between Christmas and New Year's. And the last couple of years, we've had some pretty good markets, stronger markets, that is, during that time frame. So we'll see if that trend can continue. Weather in Brazil right now, though, it's been pretty good. So that's we're going into kind of that critical month, January, where that will be watched closely. It's so far it's been pretty good. Yeah, it's hard to say. I think the biggest thing I still look at is other commodity strength. Like Ben mentioned, it's been strong in China, but again, we've got gold hitting new all-time highs again. And just every day it seems like it's up $50. So over $4,500 an ounce now, and you just wonder if that's some sort of animal spirits fad trade where everyone is kind of unloading out of fear into gold, or if it's just simply that what I'm worried about is that they're destroying the dollar denomination. So everything hard asset seems to be doing pretty well. And then we all wonder why growers are not making money here with the input costs. I think that the simple answer may be that it's the output that needs to eventually start to catch the bid. And we talk about, index fund rebalancing into the new year. There's going to be an outsized large position in precious metals because of that valuation change. I wouldn't be surprised to see, just commodities in general catch a bid. And then it may not even be the right now. It's all the strength in corn, for example, has been led by the front end. Spreads are pretty narrow. Basis is strong in the east. Corn is screaming tightness. I don't think we've been really rallying on an inflation trade. I think it's been just not enough flow. But if anything, it would be the back end of the market that I would get excited about, right? It's like we need to convince global producers to keep growing these crops through the financial incentive of actually making money growing these crops. And it may be as simple as these 26 corn needs to go up to provide that incentive,
Yeah, well, I mean, you wonder though. My question, Dustin, is how much does these 26 corn need to go up, given the fact that right now it feels like the grower's going to plant it next year? The pricing incentives. Well, I say incentives loosely, but where the ratios at and stuff like that, like it doesn't scream like we're going to have a big rotation. Back to beans.
No, that's a good point. I mean, I think that the desire to plant corn is higher at this price for guys that have that choice. Corn on corn, I think, is what I've heard anecdotally from a lot of guys still. And it does come down to like no 26 beans has the same issue. We need the financial incentive to have growers want to grow that. We haven't had a major Brazilian bean problem in a while, and it doesn't look like we're going to have one this year at the rate we're going. But it is still two hemispheres that we will eventually run into an issue in the next couple of years where that side would go back down to less abundant levels. But no 26 really needs to kind of set the benchmark to peel corn acres away. I agree with that too.
Yeah, it'll be interesting to see as we go into the first. I'll put both of you on the hot seat. I mean, where in your mind is the market at? We're going to be coming into Jan 12 and much anticipated final yields and things like that, final production yields. Where do you think the market's heads at right now, given the price action and everything we've seen?
Ben,
Dustin, or we'll go Ben first. Dustin needs to think about it.
I mean, heading to that report, obviously risk for both end users of corn and producers, and everyone is fixated on the fact that they have to lower yield, and I don't think they have to do anything. Who's to say that they don't come in and the real shocker and the gut punch is they raise it a little bit? No one knows. Certainly with price action, with the finish that we have, you would lean to the notion that it's going to be lowered. End users got to ask himself, how much heat do I want to take as well? Because I don't think that they felt like they would be having to pay $4.50 March corn 4 months ago. Most people that are using corn are still making money at it. If I was going to throw a dart and kind of be Switzerlandy here on my responses, I think you go out somewhere between 450 and 445 and 455, right? I think that there'll be some growers squaring up before the report. I think there'll be some end users buying and leave enough room that if the number is a significant change, that we gap into maybe a new pricing modem, right? We've seen 435 to 452, 455 on the high end for March in the last couple months. What does it take to extend us beyond that? And what would it take to extend us below that? Until we violate either one of those sides, we're still just in a range bound trade. So I would not expect us to go into the report at either the high of that range or the low of that range. Is what I'm getting at.
Dustin?
I think if it goes out in the high of that range, 55, maybe up to 60, I think if you're a producer, you got to really be looking at some cheap puts that get you, maybe not that week. You need a little more time for it to digest. But I think, through the month of January to see what corn wants to do, because to Dustin's point, spreads are really tight. Like you could have a correction on the front end where D26 holds some value around 460, 465, and you could easily drop March purely in spread. So I think if you go to the high end of the range for a producer, you got to really be looking at some sort of low cost put. And I think if you go into it at the low end of the room and you're an end user, options are super cheap. Got to have some protection in the event that we see a larger yield reduction.
Yeah, I just think about what happened last year because I think everyone is looking at the market and saying, well, obviously it's tight. It's doing what it did last year for corn. I'm talking about now. And we had a huge rally right in mid-Feb last year because there really wasn't a lot of flow. And there was concern that, what if Argentina doesn't grow a good corn crop, or what if, Brazil was a little bit dry, I think, going into, second season crop timeframe. So there was some weather premium built into that rally, but it was largely just the flow wasn't happening. And we had a dollar rally from the August low to the Feb high. Subsequently, we had a $1.20 break right after that, though, right? So it was tight until it wasn't, until the bushels actually wanted to find a home, and then all the spreads collapsed. Basis stayed weak, and then I'll pull up the balance sheet. We ended up having a 1.532 billion bushel carryout. At one point we were talking 1.3 because of lower yields, and then we raised it in this last couple of reports because stocks came in 200 million bushels higher last year to get us to 1.5. That was largely chalked up to less feed demand in the fourth quarter of that marketing year. And so when you look at this year, we have feed demand up 634 million bushels year over year with less cattle. I know higher weights, but it's, to me, that's a fluff number. Like they've built that because we have 1.6 billion bushels more available supply in that number. So Jason said it perfectly the last time this question was posed, I think, was it better go down, the national yield, right? The way that I think everyone is certain that Iowa production is going to go down because of disease pressure. And I don't disagree with that. There's not very many ground piles, basis east of there, especially east of Decatur, seems to say that there's not enough flow, but when you start going west and north, basis is more to be desired. And I think that that's just a matter of time that we will print a number that's large enough, I think, on final carryout projection to be at a 2 billion bushel carryout. That's just my personal belief. I don't have any solid data other than FSA certified acres, right? That acreage debate should be put to rest. It's not a survey that we're questioning from June. We certified those acres from FSA, and that we know that we have the most number of corn acres since the 30s, basically. It's just, what's the question on yield? And I think that those that are bullish because of yield, I don't disagree. I mean, if we can keep this demand pace up, even at higher prices, then that would make sense. But I fear that one or two things is going to trigger less demand, which would be higher prices. We're going to go ration demand, especially when we've got a safrinha crop from last year we can compete against. And two is that the feed number it may already be a hard objective to achieve. So I don't think that happens at higher prices. So I think either way, if you take 300 million bushels of production out, which would be substantial, we're still going to be at a 2 billion bushel carryout, is my personal opinion. And if that's the case, then that means that a lot of what's happening last year is happening right now. It's just that there's not enough moving yet, and there will be. So I don't want to sound too bearish here, but I worry a little bit that when I hear people talking about bullish markets, it's all about yield, and no one goes back and talks about the balance sheet outcome of that. So.
No, it's a good point. And it's back to kind of the same thing you've been saying for months. And it's just, you better have some balance, because I would say getting swayed too far one way, and certainly this time of year, but also going into that report could be quite dangerous, given that there's no fallbacks really, no insurance or anything like that right now.
Well, that's a good point. Well, there is PLC or ARC County, right? Those two are still being decided through marketing your average, and that will be paid October 2026. And I will say, like, I really want to stay away from being too opinionated. Obviously, I'm throwing out a lot of opinion, but like I started off saying, things could get pretty supportive at the back end of the market if it's like a true inflation type of shift. And so there are ways to still say you can have both. You can have an oversupply weighing on the front and still have rising markets from inflationary pressures. So that would probably be like the thing that would make the most sense to me, right? Is that we hold valuation, or maybe we even rise because of inflationary pressures, but it's just not where people think. The next actual thing growers are going to have to do is move this record old crop, that we perceive to have record in the next, 3 to 6 months. And that's where I get a little bit nervous about what's possible, especially after watching what happened last year. It's like, that's the recency bias in me saying that we could have a lot of pressure once that starts moving.
Oh, very good. It's all good points. Rye, real quick here, not much to speak about. We did have a softer trade on Wednesday in cattle. It was interesting to see the CME feeder index posted fresh highs. And then on the hog side, all in all, given that pretty bearish hog and pig report, I thought that they acted, pretty remarkably on Wednesday ahead of the close there. So I guess, what are your thoughts here as we wrap up the week?
Yeah, it just sounds like we ran into a little bit of higher trade kind of into the holiday, I would say, on the cattle side. I mean, we've been seeing kind of 229-ish throughout, but looked like the South started to poke up to about 230-ish. So just that in general, I think, was a little bit better kind of supportive price action overall. Just seems like market is still pretty much stuck, though, in this sideways range-bound trade between the 50-day and 100-day moving average. I think just in general, the supplies, from a supply standpoint, I think that's just the basis of where most of the trade's head is at right now. And the market looks pretty complacent. We're just kind of moving sideways. We know everything's tight. We're sitting at a historically just insanely high price. And as of right now, it just seems like we're still not out of the woods yet. So I think the day-to-day is still kind of affecting the overall kind of sentiment, but I would say that the supply situation is still kind of the basis for overall support. So that being said, just kind of once again, just kind of stuck here. And I think the hog market kind of reacted the way most people did following the hog and pig report. We definitely saw like kind of a beat across the board. The market started lower but creeped on back, and maybe that was a product of the cold storage report. There's some really tight numbers on the cold storage report. I mean, you had just overall stocks pretty much at the lowest point in 9 years. So I mean, I think there is this idea that demand is still pretty firm right now, but the hog numbers out forward are definitely larger than expected. So I think you're going to get a little bit of push and pull, with that kind of situation. Plus, we did see a big drop in bellies, drop in carcass, right before the holiday. Not totally unexpected. I think most of the focus is going to be on that retail demand kind of coming back here once we kind of get through this holiday season. So I think overall, kind of fighting kind of that negative sentiment from the hog and pig report overall, and it's going to be that way for a little bit. But seasonally, you got to think that we're going to run into some just better demand figures as we get into January and February. So yeah, you just got kind of you can make a case kind of either way today. So we'll see what the market wants to do.
Very good. Appreciate it. Well, fellas, pretty good on a slow news day to make it through into the open, but it is Friday. Brian is
Ho, ho, ho! Oh, my goodness. Sorry I'm late, everyone. I was a little busy on Christmas Eve to make that show, but now I'm here for this show.
Yay!
Hey, Santa.
Hello.
Hey, Santa.
Hey, everyone. Well, I just wanted to come on here and, take part in the War Room. It's my favorite program. Today, today's fun fact is all about who on the show today is on the nice list and who's on the naughty list and why. And if you're lucky, I might have an extra gift for you that didn't make it under your tree. Let's start with Ryland. Ryland is by far on the naughty list.
Oh, come on.
And here's why. Ryland has been late to 33 episodes of the War Room.
Oh my God, I didn't realize we're keeping track here.
That's right. And all I had to
Pretty
do...
good out of 500 plus. I mean,
Yeah, I'd say that's pretty nice.
Yes, I guess. So, maybe you'll do better next year. So cool for you, Ryland. Dustin, you're up next. Dustin has been a part of 18 AgYield TikToks that have amassed thousands of views. So you're on the nice list, Dustin. Congratulations. And I thought about an extra special gift that you would enjoy, and I figured it's probably a collection of boring graphs. So here you go. You can put this
boring.
in your office and look at it, and they go up and they go down, and here's your Christmas gift.
They go up and down.
You know how graphs work. Anyway, moving on to my closest childhood friend, Ben Wigington. Oh, my goodness. On a completely unrelated note, I'm 1,700 years old. Anyway, Ben, I heard you spent the year charging forth with your Pee Wee football team and doing a great job of it. So guess what? You are on the nice list, sir. And I got an extra special gift for you. You ready for this? It's the tinfoil hat you keep referencing. Congratulations.
Wow. Is that
We
real?
gotta send it to
tinfoil?
Fort Wayne. We got to send that off.
I'll have to ship that out when I'm done here. Anyway, and also, if you're not on today's show, naughty list. Okay, that's just, I don't need any
100%.
specific details there. But let's move on to Dan. Dan, you have led the War Room to many great episodes and done many good things throughout the year. Unfortunately, in kind of an oversight, you have yet to invite your marketing guy, Jack, out to golf. So now you're on the naughty list. I don't make the rules.
Only one way to get on that nice list.
Listen, Jack understands his golf game's not ready for the country clubs, but perhaps there's an affordable public course that you could spend time together at. Just an idea.
We're going to need a couple thousand more subscribers there, folks. So if you click on the subscribe button, if we get here, how about this? We get to 5,000 subscribers, we'll live feed Jack and I playing golf. How's that?
Wow.
Wow. You heard it here first, folks.
I'll watch that.
Anyway, but although Dan is on the naughty list, the Dempsey family is obviously on the nice list. And I know I was fortunate enough to give Keaton a MetaQuest VR headset this year, which he was very excited about. But there's one thing that the Dempsey daughters have been asking for a very long time, and that's a dog. So downstairs in the lobby of this building, I have not one, not two, but 3 dogs. 3 German Shepherds the size of HVs, and they're not potty trained, and they're ready to come home with you, Dan. So, for the record, if Dan doesn't come home with dogs, it's in complete disagreement with Santa's words. So, anyway, that's how that's going to go.
Hope they don't
You're
watch
on the
this
naughty
one.
list.
You're on the naughty list.
Yeah. I've had a lot of fun, everyone. Happy Christmas, Happy New Year, and I'll see you next year. Ho, ho, ho.
Hi, Santa. Jeez.
He never disappoints.
No.
And he's probably going to keep the snow on for the whole outro. I can only imagine.
It'll never end.
Just came into the open here. We got March corn up a penny and 3/4, 4.52 3/4. January soybeans are up 3 3/4 now at 10.67, and March Chicago wheat's up a penny and a half at 5.23 1/4. Appreciate everybody that tuned in here this morning. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great Friday and a great weekend, and we look forward to talking to you again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.